Today, I'm going to show you how I've made 200% in Ethereum. I expect to make 600%, and I'm also going to show you how I've locked in 60% in a logical way, shorting the market. So if you like today's content, like, subscribe, hit the bell notification. Let's dive straight into Ethereum. 4 days ago, I actually did a video on Ethereum. If I just show you the YouTube video itself. And what we said was we're anticipating for the market to go sideways to down over the next few days. And that's exactly what it's done. But not only were we looking at the market going sideways to down, and this is what we're going to look at today, is how we short the market and make money from the analysis. Because you can do the hard work with the analysis, but how do you make money from it? So what we're going to do here, I'm going to do an update, is markets tend to move in 5s and 3s, and that's really, really important. And what I'm going to show you is how we identified this top, and actually just this movement over here, how we made 200% in terms of risk reward, and how we anticipate the market to go to down here. Now, by the way, if you like what you're going to see today, I've just launched my brand new 4 Secrets Crypto Trading Masterclass. It's absolutely free. It's to take your trading to the next level. In the description link below. Full access. Enjoy it. Make loads of notes. You're going to have a great time. So with Ethereum, right? Again, we want to look at markets as 5s and 3s, always. And it's more often than not 1, 2, 3, 4, 5 on the upside. And then we anticipate a 3-wave correction. And what we've identified in our last video of Ethereum was this top, which is represented by this B over here. This B over here. And it's responded really, really well. And we've had a nice movement to the downside. So we're going to cover some details today. So what I'm going to do initially is I'm going to zoom in over here and look at this market. We use something called Fibonacci price, Elliott waves, and everything else. But we had reason to believe, and in the last video I'll go into detail, if I just take the data back, I'm going to take the data back to here. Now we've got this momentum indicator at the bottom, the blue and the red line. And what we simply said was, when the blue line goes below the red, over here, and it crosses, we want to take a short trade setup. So literally the market the next day, it crossed over. So we simply just put in an order to say we want to go short on a 1-bar low. So one of the best ways of making money in the markets is shorting the market, betting on the price going down. But rather than just buying it at a fixed price, it's actually better practice to let the market trigger you in with something called an order. And then we had a stop loss. A stop loss, which is currently active, is up here above this swing high. And the logic behind the stop loss is if the market goes above this point over here, we don't want to be in the market because this then is no longer the top, right? So, but the probability states based on pattern, momentum, and some other factors, which I cover in the 4 Secrets Masterclass. And this is the practical application of what I'm going to show you in the Masterclass, is that the price is likely to go down. So now we're in the trade, we're risking 2%. And then we got triggered into the trade. And then yesterday it moved nicely in our direction. And this is where the price is currently. So we're actually 200% up in terms of the range of movement so far. But I'm going to next show you how I've locked in 60% profits in terms of risk reward. So no matter what happens, the worst case scenario is we made 60%, right? Which is good news. Best case scenario, we make 600%. I'm going to cover that as well. And the logic in terms of thinking about math, because some people, sometimes it's not easy, right? Figuring out the math. So I'm going to cover some of that with you as well. So let's just look at the risk reward, right? Risk reward, this is what I mean by, this is our stop loss distance from here to here. And the price has gone down to this point down here. Right, if I just pull this across so we can see it a bit clearer. It is down here. So actually, I think our entry was actually up here. My entry was here. Sorry, I'm just going to make sure this is accurate. And then just this low over here. So what this represents over here is a 200% risk reward. In other words, over here, we made 200%. This was our risk. Whatever you risk for the trade, good practice is 2%. And currently we've made 4% in terms of the extreme. But that's what you call paper profits because it's not locked in. So next I'm going to show you how we've locked in 60%. And it's a phenomenal risk management tool where you want to know that the market, it owes us nothing. So it might go against us. So I want to read you a quote from my book. By the way, my name is Jagier, the award-winning author of The Extraordinary New Venture Capital Opportunity. You can actually now download my book for free. But there's chapter 2, there's a particular quote, because we're going to do the practical application of this quote. The chapter is called Understanding Money, and the quote is from Warren Buffett. It says, rule number 1, never lose money. And rule number 2 is never forget rule number 1. Now, we want to have a practical methodology of how to do this. So to show you this, I'm going to drop down to a 60-minute chart. Now, by the way, I'm covering a lot, right? We're covering 4 elements, and everything is difficult before it's easy. If you're driving a car for the first time, or if you're looking at entry strategies, exit strategies, placing orders, we're looking at momentum, we're looking at pattern, price, time, etc. So that's why I've created the 4 Secrets Crypto Trading Masterclass, absolutely free. And I cover my best stuff, and you're going to absolutely love it because it shows you how to use this in a practical manner. So make sure you take advantage of that. It's in the description link below. So what we're going to do next is we're going to dive into a 1-hour chart. Now, what we're going to look at, just so we're all on the same page, is this part of the market here, right? Because what you want to know is, even when the market doesn't unfold as anticipated, there's normally a minimum move that occurs, and that if the market continues to the upside, we can do something quite logical down here to make sure we're either break even or locking in a small amount of profit, even when we're wrong. And then when we're right, we lock in a lot of profit. That's the 600%. In fact, let me cover the 600% first, because I want to finish on this. Sorry, let me just do this. So I said to you at the beginning, we've locked in 200%. Hopefully that makes sense. Right, I'm going to bring this back up. So what do we mean by 600%? Well, the expectation for this trade is actually down here in this range. And what we anticipate is that the market is likely to reach this range down here. Why? Well, it's quite simple. It's really simple. It's logical. It's mechanical. It's this wave here and this wave here tend to mirror each other. So we took that measurement, or the likely ratio that's highly probable is this range over here. And if we look at this, this is a 600%. 6 stands for 600% risk reward in terms of what we're risking here. We're potentially making 6 times the amount in this distance to the downside. It might be more, might be less. We don't know that right now, but that's the potential. And we're in the trade, shorting the market right now. So last but not least, what we're going to finish on is risk management, right? Risk management. I'm going to an hourly chart, taking that last part of the market. And what we've got over here, I'm going to keep it really, really simple, is we've got this, what looks like to be some type of 1, 2, 3, 4, 5 wave movement. And if this is not a trend to the downside, what typically occurs is at least a 3-wave move. And we've got a 3-wave move. Now, at this point, we believe it's going to continue to the downside, but there's no way of actually knowing. So I call it Unit 1 and Unit 2 trade strategies. It's an insurance position where we say this might be a wave 1 or it might be a wave A. In other words, it could be an impulsive sequence to the downside, or it could just be a correction. So this would be the impulse and this would be the correction. The challenge is they both look identical. This is why we write 2 or B up here. Same thing. So what we do is half of our position, we just believe that this is a correction. So what do we do is we actually just put a stop loss as we move it from over here to entry, and then our stop loss from entry, half of our position to over here. And what that means is we've locked in this much profit. So even if the market now goes against us, we've made 60% risk reward, which is not bad. Now I want to make 600% risk reward, but the whole name of the game is to become the casino and have proper risk management and be prepared for pullbacks against you. So there you have it. There you have it. So Ethereum made 200% on paper. 600% is what we expect. 60% locked in. And we'll keep an eye on how we trail this as well. I'm also looking to compound this trade as well. So adding position at logical points. So if you like today's content, like, subscribe, hit the bell notification. Make sure you're taking a free masterclass below. I'm going to loop that quote one more time because it's so valuable, but we covered the practical application of the quote. And it's from Warren Buffett, right? It says, rule number 1, never lose money. And rule number 2, never forget rule number 1. All right, see you soon.